After yesterday's massive stock sell-off that saw the Dow Jones plunge nearly 1,200 points, Wall Street was a roller coaster again today, but ended in positive territory with the Dow closing up 567 points. Brian Bremberg chairs the program in business and finance at the King's College in Manhattan. Joins us now to break down what's behind the jitters. Brian, welcome. Great to have you.
Great to be here.
Okay, can you give us some context, some perspective on what we've seen Friday into this week?
Yeah, look, context here is very important. You have to remember, versus this time last year, the market is still up over 20%. So we are still in a very good spot. Today, we're basically at the place that we were at the beginning of January. January was an extraordinary month. We saw a huge run up, 1,800 points in the Dow. That's a lot, and markets were bound to correct from that just a little bit. And we saw that yesterday. But then again, today we saw the markets bump back up. So you just have to remember, even though it's hard to believe given the past year, markets do go down occasionally, and we're finally starting to see that.
So what would you say is a primary factor in some of this instability? A lot of people want to point fingers here at Washington. Are we going to have another shutdown? Are they going to resolve immigration? There's so much unfinished business here, but is that just kind of inside the Beltway thinking? Are there other global interests that are impacting this? What's happening?
Yeah, I think that actually it has more to do with the Friday's jobs report that we saw last week. If you remember that report, we saw one really key number. Wages are growing faster than they have since the beginning of the recession, which is really good news for Main Street. But Wall Street looks at that and says, I think inflation might start to go up a little bit more this year, which means interest rates are going to rise a little bit more this year. And that makes Wall Street nervous. So what happened is we got good news for Main Street on Friday. Wall Street took it as bad news, and they started to think ahead about 2018. And that's why we saw some of the gyrations in the stock market. They're going to get used to that. They're going to get comfortable with rising interest rates this year, and that's why I think you're going to see the market continue to move up. It might be a more bumpy ride in 2018, but you're going to continue to see it go up because the underlying economy remains so strong right now.
You know, the president has talked endlessly about how well the markets are doing on his tenure, and a lot of people have said, listen, he's rolled back regulations, he's given businesses more stability in some areas. The tax cut law that passed, those are all encouraging things that could be driving the markets. Others have cautioned he never should have taken credit because now he has to own what's happening over the last few days. I want to read something from Dan Alpert, managing partner at Westwood Capital. He said this in Vanity Fair. He says Trump's claims all along that the stock market is reflecting his presidency are as ridiculous as blaming him when the market goes down. At the end of the day, the markets would not have risen if not for fairly good corporate earnings and improvement in employment stats and everything that goes along with that. But Trump truly doesn't understand any of this. He does not understand what's going on in the financial markets. He's a businessman, though, Brian. What's your take on those comments?
I think it's a pretty tall claim to say that the president doesn't understand what's going on in financial markets. Look, President Trump has chosen to talk about the stock market a lot, and that means you have to own it when it goes up and you have to own it when it goes down. But the fact is the underlying economy here, economic growth, jobs, consumer confidence, business confidence, these things are at very, very high levels, and much of that has to do with policy moves like cutting corporate taxes, like repealing regulation. So, look, you can criticize the president all you want for hitching his wagon to the stock market, but the fact is, really, all he has to do is point to the real underlying economy where we have so much strength and say, that's what my policies aim at, and that's ultimately what drives these corporate profits, which, as the person you mentioned just said, that's what drives the stock market. True, but corporate profits are based on things like tax reform and regulation, so it fits together here.
All right. Well, tomorrow is a new day. We'll see how the markets wake up. In the meantime, Brian, thank you very much for your insights. We appreciate it.